Hi everybody, Marco Carbajo here from businesscreditbuilders.org. Today's video we're going to talk about soft pull business credit lines and funding for your business. So if you're a business owner, you're looking to get a line of credit, you're looking for funding, and you're very cautious about getting any inquiries on your personal credit, then a soft pull doesn't impact your personal credit. So we're going to share with you in this video four sources where you can get credit and funding for your business that only trigger our soft pull. So let's get started. So first and foremost, I want to share with you the difference between traditional funding and alternative funding, because there's a very big difference in applying for funding as a business owner that you should be aware of. Now, when we're talking about traditional, in this particular video, the soft pull ones we're talking about are more alternative funding, not traditional. Now, I put together this chart here to kind of give you an understanding of what's important when it comes to getting traditional funding, because obviously going traditional funding, you're obviously going to get the best rates, the best terms. Why? Because these traditional financing like banks, credit unions, community banks, etc., the national banks, they're going to require the most documentation. They're going to do rigorous underwriting. They're going to require you to provide tax returns, documentation. So they really go through your business through a fine-tooth comb, and getting that approval, that's why you're able to get the best rates and the best terms. So if you look at this, we're looking at traditional lending. There's strict underwriting requirements. So I kind of want to share with you, should you consider alternative lending or traditional funding? So I always tell people, before you apply for a line of credit, did you check with your bank where you do business with, where you have your business bank account with? Because that's the first place you should inquire about getting a line of credit or even a business credit card with your financial institution, because you have a relationship with them, you have a bank account with them, your business revenues is going through with them. If they can't accommodate you, or they require you to be at least 2 years in business, etc., they need lots of documentation, or your business doesn't qualify, that's when you want to maybe look at alternative solutions. Okay, so you'll see banks typically like big businesses. Okay, so you're doing millions of dollars in revenue, etc., you got to be at least 2 years in business for a majority of traditional lenders. They want great credit scores. They want you to have assets and cash reserves for the business. So you'll see that it's all about minimizing risk for banks. Okay, so they also like to lend a lot of money, but they also want to have less risk. And it's a much longer process in getting that approval. But if you fit that criteria for traditional lending, you have solid revenues, you can provide all the documentation they need, like your P&L statements, your debt schedules, etc. One thing I also want to make sure before you go the traditional lending route is, what do they look for on your debt service coverage ratio? Is they want you to be at least 1.25. So you do those calculations. If your DSCR is around 1.25, then you should be golden in being able to get traditional lending, traditional loans. Okay, but if your DSCR is under that, it's under 1, then your business doesn't have the type of strength to furnish and support a loan or a line of credit. So just keep that in mind. Now, alternative lending, you'll see it's more flexible, and these are more non-traditional lending, like your fintech companies, etc. Now they have flexible underwriting. They usually require partial documentation. So if you're someone who doesn't want to provide full tax returns, you don't want to do the P&Ls, the balance sheets, etc., but you do have, let's say, bank statements. Okay, so that's partial docs. They cater more to small businesses. You could be 6 months in business with many of these different lenders out there, and 600 credit scores, even 550 credit scores. There's some lenders that will lend to your business. And they usually don't look at, they don't look at your assets, cash reserves, and they go by more factoring compared to APR. So there's a big difference, and I just want to make sure you understand this, okay? Most people say, well, what's my interest rate when you're getting funding as far as like a loan or a line of credit? Okay, and APR, you can get a good interest rate, but remember, with APR, you can compound that interest if you don't pay it off. So even though you have a good APR, but if you carry that debt month after month, year after year, then that interest compounds. So in the long term, you can spend a ton of money in interest, even if you think you have a low interest rate. But if you're not paying the debt off, that's how it's called compound interest. The difference with factor rate, it's a flat fee or flat cost you're paying for capital. There's no compounding in interest. So you're borrowing this much, this is how much you're paying. and you know exactly right up front what you're paying for your money. So that's kind of a something to take in consideration when you look at traditional funding compared to alternative funding. You know what you're paying for on alternative because this is what you're paying for. You're paying for every dollar you're borrowing. Let's say you're paying back $1.20, and that's what you're paying back. With an interest rate, yeah, you might get a low interest rate, but if you don't pay it off in a certain period of time, that interest is going to compound year after year after year. Okay, so another benefit of alternative lending is it's really fast. You can get funding literally within 1 to 3 days. Okay, so that's just something I want to kind of go over with you, what to expect. Now let's talk about choosing traditional versus choosing alternative funding. Okay, and I'm going to get into these sources, but I just want you to kind of have a very big, better understanding of what to expect. So if you could supply, and I did talk about this on the previous slide, is if you could provide these full docs, just look at this list. If you have $250 in gross annual revenue minimum, you have 2-year track record, you have strong personal credit, you have the financials, you have assets, you've established business credit, you can wait for funding even if it takes you a month or longer, then maybe choose a traditional route. But like a big thing, like I said, is the key is your debt service credit coverage ratio. 1.25 is the number you want to be at. That's where most lenders look at, is your DSCR is 1.25. If you're under that and you're under 1, let's say, then you're going to want to look at alternative. Okay, if you want alternative, you may be a business owner who does not want to supply a lot of documentation. Okay, you don't want to go through that long process. You don't want to provide full docs. Then I'll choose alternative financing. You're going to have, let's say you only have $50,000 or more in gross annual revenue for your business. You're going to want to choose alternative. Your business is just in the growing stages. You're 6 months in business. You have less than perfect credit. You have limited or no assets to the business, and you're just starting out building business credit, or you have no business credit, and you want your funding fast, then alternative is going to be your option. Okay, so now keep in mind, this is what's really important is FICO. If you see on the very bottom here, is that the FICO has its own credit rating system for businesses called the SBSS score. Okay, and what that is that they take the data from you as a business owner as well as the business itself, your business credit reports, and they create a scoring model. Now, over 7,500 lenders nationwide use this score as part of their underwriting process. So that's why building business credit is so important. If you don't have business credit, that will affect your SBSS score from FICO. Okay, you still may generate a SBSS score if you don't have a business credit file, because they still use your personal credit report, and they also use some information from the industry that your business is in, maybe your age of your business, some other data they use to compile that SBSS score. But it will help your score if you establish business credit. Okay, so keep that in mind when people say, well, why do I need business credit? Who uses it? Over 7,500 lenders will pull that score, which is a combination of your business credit report and your personal credit report, when it comes to their lending decisions when you're looking for traditional funding. Okay, so the first one I want to talk about, this is a lending marketplace called ROK Financial, bankbusinessline.com. That's the link you want to go to. And basically with ROK Financial, they have 85 lenders they work with. And most people say, well, does that mean you're going to submit my application to 85 lenders? No. What they do is with the data that's put in, when they do your analysis, they only present you with maybe 1 to 2 offers, and that's it. And it's a soft pull. Okay, so you're not getting a trigger to hard pull, and that's what's really, really cool. So that's where, in a marketplace, is where they have a combination of lenders that offer certain funding products, and then you get the best rate, the best term, and the best offer based on what they present to you. And it's a soft pull, which is huge. Now, there's some minimum requirements with this particular marketplace. You want to have, they do offer business lines of credit from $10,000 to $1 million. So they have a huge range, and this is all depending on the lender that provides you an offer, because they're only going to give you 1 to 2 offers. Okay, they do require you to have 6 months to 10-year terms for this lines of credit that you accept if you accept an offer. Their business term loans will range from $25K to $2 million, 6 months and 10-year terms. So these are the funding products that this marketplace offers, along with a couple other ones. But just keep in mind, you may not qualify for a line of credit, so your offer may be for a term loan instead. So it depends on within the 1 or 2 offers you get. It may be a line of credit and a term loan, but you only can accept one offer. You can't accept both unless they're different funding products. Like one's a line of credit and one's a loan. But you can't accept 2 loans at the 2 offers that are both loans. You can't accept 2 offers that are both lines of credit. It's one or the other. Okay, and they do equipment financing as well, $10,000 to $5 million. What I really like about this though is they give you requirements. So if you don't meet these requirements, obviously don't apply. It's a waste of your time. It's a waste of their time, and you're going to flat out denial. But you at least have something to work with. Okay, and the beauty of it, depending on if you get a loan or a line of credit, they may report to the Business Credit Bureau, but these are non-reporting on your personal credit. So some lenders are off-grid. What that means is, I say off-grid because they don't report to the Business Credit Bureaus. Okay, like Fundbox, that's another lender that will give your business a line of credit, but they don't report to a Business Credit Bureau, and they don't report to your personal credit. Okay, so they do require to be 6 months in business, $5,000 in monthly revenue every single month. If you're not doing $5,000 in monthly revenue through your business checking account, don't apply. Okay, 600 credit score. They do a soft pull on your credit. So if you're below a 600 credit score, don't apply with this particular marketplace. But they do a soft pull, and let's talk about the second option, which is another lending marketplace. This is number 2, is National Business Capital. You can go to businesscapitalreview.com. Real quick, let me kind of go back real quick on the first one I talked about. When you go to ROK Financial, just wanted to show you real quick what you're going to see. You'll see our logos on there, but it's a really simple application. You fill out this application, you click apply now, and then you'll be contacted by a senior business advisor at ROK Financial, and they'll present to you your offers, which is really, really cool. Now, National Business Capital, go to businesscapitalreview.com, and the way that one works is, and same thing, you'll see we have application page with this lender. This is a marketplace, and it's really simple. You're going to put your information in there, and you're going to get matched with 1 to 2 offers on that one as well. So that's what's really powerful with these marketplaces, because it's really, really simple data. They are going to want to look at your business data, your bank account data, excuse me. So they use digital encryptions for that, specific software. I don't know all that techie stuff. But let's talk about businesscapitalreview.com. Now, they offer business lines of credit up to $250K. And real quick, they have 75 lenders that they work with for National Business Capital. Okay, so ROK Financial has 85. National Business Capital has 75 lenders they work with. And again, you're not getting bombarded with all these different lenders contacting you. I know that's most people's fear. The way they do it with these particular marketplaces, they only offer you 1 to 2 offers, and that's it. Okay, so that's where, and the beauty of it is the soft pull as well. You're not getting hard pulls from all these different lenders. They're basically aggregating this data, and they're finding the best 1 to 2 lenders, what they offer, best terms, and they present to you those offers, and you can accept or reject the offer. So if you don't like what they're offering you, just don't accept it. Okay, so business lines of credit up to $250K, business term loans up to $100K, business cash advances up to $5 million, equipment financing. So a lot of different funding products. Okay, and that's what I love about this, because you as a business owner, you might not know. You might want a business loan, but you may not be aware of that you also qualify for a business line of credit. Okay, and that's why sometimes these marketplaces are really, really helpful, because they can present to you an option or two that you may not even thought you were qualified for. Okay, now requirements for this particular marketplace is they want you to be 12 months in business and $15,000 in monthly revenue. So where ROK Financial, you can be doing $5,000 a month in revenue. With this, a little higher revenue, $15,000 a month in revenue. Now, obviously, these marketplaces are not going to work for you if you're a startup company. We do have an option for you on the fourth solution here on this video. So just hold tight, because we have, for those of you who are startups, let's say you're not even doing $5,000 a month in revenue, or you're not even doing $15,000 a month in revenue. So these will obviously not work for you. But they do have a lower credit score threshold, 500 credit score. They do a soft pull on your Experian report. So if you have a 550 credit score, 500, 600, they're going to do a soft pull on Experian when it comes to their review process. Now, this is a third place. This is another financing platform. Now, this is more of a traditional marketplace. They also do a soft pull. Now, Smart Biz is they're most widely known to do SBA 7A loans. That's what how they grew to being a very successful company. They work with 5 to 6 partner banks that specialize in SBA loans. So what does Smart Biz do is they package the loan. They package the file for their partner banks. And then the partner bank is the one that actually gives you the loan, the SBA backed loan. We all know that the SBA doesn't lend money; they just back the loans up to a percentage. Okay, but now what's really cool about smartfundingreview.com, that's the link for that particular platform, is they do SBA 7A Business A loans, but this is going to require much more documentation. So if you're looking for more of a better rate, lower interest rate, and you're comfortable giving full documentation, and it's much easier to get a SBA back loan compared to a traditional business loan because the SBA is backing up the loan. There's less risk to the bank because obviously there's a guarantee back there. But with the SBA loans, there's much more documentation. You're looking at 10-year terms with the SBA 7A loan, and so that's the rates are prime plus 2.75%. Okay, so you have the prime rate, and then you add 2.75%. That's the type of rate you're going to get on this term loan, which is really favorable 10-year terms. Okay, now they also do Smart Biz. If you don't qualify for an SBA 7A loan, because they pull your SBSS score, they pull your credit, a soft pull. They'll tell you right away if it's not a match, you can't do 7A, but they also offer business term loans. So they have 12 network lenders that they also work with. Okay, so if you're trying to get into SBA 7A loan and they can't package your loan, and this is all done seamlessly, by the way, very fast, then they'll move you into one of their network lenders that may give you a business term loan or may give you a business line of credit. So that's what's really cool, is you kind of have a fallback potential deal. And those term loans are 2, 3, and 5-year terms, fixed rates at 8.25%. Now, what are the requirements of Smart Biz with this particular financing platform? You got to be 2 years in business, $250,000 annual gross revenue. Okay, so they're not dealing with startups. You can't get an SBA loan with a startup. You got to be an existing business with doing $250K in annual revenue, 650 plus credit score. They're going to do a soft pull on your Experian. They use FICO too. Okay, and also they're going to require you to have an SBSS score of 155. All right, so that's your scoring model that FICO has for businesses. What they do is that they pull data from personal credit report as an owner, and they also pull your business credit data, and they come up with your business credit score. Your credit score on the SBSS has to be 155 to even move forward with an SBA 7A loan. Okay. Now you'll also see here for SBA 7A loans, you want to be prepared. You're going to need to provide 2 years of personal and business tax returns, your P&Ls, your balance sheet, as well as your bank statement. So lots of documentation for a 7A loan. Now I want to show you real quick application looks like. Very simple. When you go to smartfundingreview.com, you'll see it's right here. With Smart Biz, you get to select if you want this SBA loan or just a regular term loan, or help me decide you're not sure, you just select that, and then how much you're looking for, and tell us a little about yourself. And then they're going to take you to the application process. So it's a really simple process, takes you through step by step. So I kind of, as you know, we just went through a couple different places for you for soft pulls. You got ROK Financial, 85 lenders, only 5,000 revenue, 600 credit scores. So that's, and I'm sure of those of you watch, some of you fit in that particular criteria. Then you have National Business Capital, 75 lenders at your disposal. They want you to be doing $15,000 a month in revenue, 2 years in business, but your credit score is going to be 500. So that's another area for you that you could potentially get funding for your business with soft pull. Third is more for traditional. Let's say you're doing strong revenues, and we just share with you Smart Biz website, smartfundingreview.com. They have SBA 7A loans, they have term loans, lines of credit, but more documents are going to be required with that. And that, I would have to say this option here leans a little bit more traditional than the other two, but this is also soft pull. Now the fourth and final one is for those of you who, let's say you don't even have the revenues, or you don't want to provide documentation, or let's just say you're looking for something easier, and you have good credit, then that's the next option I'd like to share with you is our proof qualification view. This is what we do. We've done this on videos before. We talked about businessfundingreview.com, which is our review process, because I know there's a lot of information to go through. But our pre-qualification, we have many more options available to us than just the lenders that you've seen on this video. We have a business credit card funding, we have personal loans, personal lines of credit, we do fintech business credit as well, like alternative cards, etc., that only look at more business data or bank data than personal credit. So with our pre-qualification review, we do a complete review on all these options that may be available to you and provide you kind of like a custom recommendation. Okay, which, it's very hard as a business owner, I understand. It's very hard as a business owner, I understand, to kind of determine where should I apply. Should I go here, here, here? So I kind of, in this video, wanted to give you as much direction as possible, but this is what one of the more seamless ways for you is because you're uploading a copy of your personal credit report with our funding process. We're not doing a hard pull for pre-qual. Okay, so this is just a review though. Then we present to you funding projections, what's available, and for example, if we give you a projection of, say, business credit card funding, if you want to go with that route, and let's say we've given you a 50 or 70,000 projection there. Now, when we do go that route, those particular banks will pull a hard pull. Okay, so this is a soft pull just for review. Okay. But if you want to go forward funding with many of our funding products, they will maybe trigger a hard pull, and we'll disclose that to you right up front when we do our review with you. Okay. But starting out, you're going to upload a copy of your personal credit report. There's no revenue requirements with our review, so we do get funding for startups and our existing businesses. For startups, though, the most popular one, of course, is business credit card funding for our startups, and we've done plenty of videos. You might want to watch this one on business credit approvals, how to maximize your business credit card approvals. So with this review, we're going to look at everything. We're going to look at from personal loans, lines of credit on the personal side, to business credit card funding, to even business lines of credit. So that's what gives you much more options that may not be available with some of those other providers, because those other lending marketplaces, they don't do business credit card funding. They only do lines of credit and loans, okay, and some equipment financing. Okay, so businessfundingreview.com, if you have credit scores in the 680 or higher range with at least 2 bureaus, then I would recommend going there. We're going to do an analysis and give you some recommendations. Even if you don't qualify for business credit card funding, which is by far one of the easiest types of funding to get, we're going to give you some recommendations, some alternative options as well. Okay, so this is 4 ways for you to get funding for your business via soft pull. And if you found this information valuable, please give us a thumbs up, subscribe to our YouTube channel, and just check out our main website, businesscreditbuilders.org, where we have a done-for-you funding solutions, and we also have our step-by-step business credit building system. So with that, make it a great day, and we'll talk to you real soon.